Welcome back. Vishal, Mart reported a steady set of Q3 numbers. The stock is down nearly 4-5% in trade, as the revenue growth at 17% is lower than the revenue run rate the company has enjoyed in the past. And even the reported same-store sales growth at 6.1% was impacted on account of the advancing of the Durga Puja to Q2. Adjusted same-store sales growth was at 9.6%. Gunender, Kapur, MD and CEO Vishal Mart, is now joining in. Thank you very much for joining in, and thank you for waiting by patiently. Now, historically, and when we spoke to you during the IPO, you used to grow at 24-25%. 9-month revenue growth is 20%. What is the sustainable growth path?
Firstly, thank you very much for having me on your show, and good morning to everyone. I must point out that at the time of IPO, we had guided for a growth of about 20%, an EBITDA growth of about 25%, and a PAT growth of about 30%. So those were the broad numbers. And if you look at a performance for the first 9 months of the year, it's 10% same-store sales growth, actually 10.3% to be precise. The EBITDA growth is 24.4%, and the PAT growth is 30%. So it's exactly as per what we had broadly guided at the time of IPO. And each of the quarters have been quite consistent with that guidance. What you're referring to is indeed correct. The festive season this year is split between Q2 and Q3 because Durga Puja fell in Q2, and therefore to that extent we got extra revenue in Q2. So in Q2 we achieved a same-store sales growth of 12.8%. Consequently, the EBITDA growth was also 30% as against 25%, which is what we had said. And our PAT growth was 46.5% in Q2. So if you look at our YTD numbers where everything becomes equal, we are exactly as per what we had guided, which is 10.3% same-store sales growth, 20% overall revenue growth, 24.4% EBITDA growth, and 30% PAT growth.
Okay. And that is the long-standing guidance even as we look into FY27, because there appears to be increased competition from the likes of Zudio, Meesho, etc. So given the way the competitive landscape is emerging, you're confident about this 10% SSG growth, 20% top line, 25% EBITDA, and 30% growth sustaining at least for FY27?
We feel pretty good about that, but I must quickly clarify that that guidance is for the full year. As you know, we have seasonality in this business, depending on when the festivals fall in which particular quarter, and also because of the onset of winters and summers and so on. And therefore, I must quickly clarify that the guidance is for the full year. It is not for each of the quarters which constitute the year. Again, depending on the seasonality, some quarters would be higher, and there would be some other quarters which will be consequently lower. But the full year guidance, yes, that's a guidance.
Okay. And how is the competitive landscape on account of, say, Zudio, Meesho, etc.?
Well, the competitive landscape has been quite intense over the last 2-3 years. In addition to the couple of players that you've mentioned, we have other very large competitors too. And then we have quite a few regional competitors who compete with us in various parts of the country. And finally, you have competition from the digital commerce, quick commerce, etc. But I would submit that the competitive landscape has not changed that dramatically over the last 12 months. It just continues to be there. And there are various periods or various quarters when some folks are expanding, and there are certain other periods when some folks in the market are not expanding or restructuring their businesses. So that, of course, changes from quarter to quarter. But otherwise, I would submit that the competitive landscape over the last 1 year has been quite the same.
One word answer, Kedara, block coming anytime soon in the next 6 months, say?
I don't know. As you know, I'm not the investor there. So, yeah, I wouldn't know.
All right, a short conversation, but thank you very much, Mr. Kapur, for joining in. Great.